Just the fact that Coca-Cola, all that's continuing down is not pretty. I'm sorry, but you got 1 minute, but it'll be all be on the BLS website. You could also go to tradingeconomics.com. We will have all of the data here now, but that's it. Is it going to be an easy print or no, man? Easy print or no? That is going to be the question. Oh, man. So good luck. You got 30 seconds, Chad. Let's have a good one. Let's have a good one. All right. Good luck. Good luck. Again, the number 170, 160, 90,000 would be considered a surprisingly low number. 200,000 would make people poop their pants, I think. And again, bonds are going to move the most, so keep that in mind. 10 seconds. It's never an easy read. Maybe we get one. No, we've had a couple. It's like once every 4 months you get an easy read. We'll see what happens. 3, 2, 1. Boop. Oh, and we're down. Hold on. 336, bro. 330 payrolls, 263. Wait, private payrolls were 263 versus 160. Manufacturing, 17 versus 5. Government, 73 versus 5,000 last time. Average weekly hours, that's the only thing that came in line. Participation rate. Did this thing jump? I mean, it's highest of the last quarter, but that's awful. That even negates a lot of the other ones. Bond market is bouncing, though. Hold on, guys. This is reminding me of October. Hold on. All right, man. The market's open. No. You're ready to go, baby. You're ready to go. Like the video. Again, right now you are down by 0.7 on the NASDAQ, bro. That first candle was brutal. So Apple's trying to hold up. I'm kind of down for the greedy short. So I don't know. We're either going to get the first move off of here. You'll have a greedy short at 42.50. That's like the low of the candle, but I would prefer a little bit more of a bounce in short, but it's only 0.5% for now, so let's see what happens. Earnings run up could be in effect, but today has a lot of caution. Again, there is a possibility that the 10-year could hit 5% today, and it has the juice. It has the reason, it has the pre-order pretty much after that data, and then next week we have CPI. So after CPI, I believe we start getting the earnings ramp, but even then, until then, today's data, it doesn't make it a one-way road. This is not going to be as clean. Baba, wait, no way. China names are up. China names aren't even doing that bad. Google's on the high. A couple of other names. Where's that Pumper Sandler pick? SHLS. Is up 1%. Shoals. Is all this happening have an effect on gold? This is bad for gold. All the data you had today is bad for gold because it's bad for bonds. It's all justifying higher rate. It's justifying just effery. Again, it's not. It pretty much makes this, all the data today, it makes what we've gotten over the last couple of days and the last couple of weeks, it justifies all of it. That's the only problem, is that if we had a job number come in low, people would have been like, yeah, that none of it mattered, but it's just like you've had the bonds really make a run, and all you've gotten is data that has supported it. So it's pretty wild. SMCI red to green. SMCI, didn't they have bad news? They were talking about AI chips made up for a slowdown in Apple. So I don't know, or not Apple, but for chips. Depends how you want to look at it. NVIDIA's only down by 0.5. Again, SPY by 0.4 right now here. Is that Microsoft, Google, SFM on the high? Dude, NASDAQ down 0.72 at open. NASDAQ actually came to 0.4, though, in those first 3 minutes.
Order filled. Stop
NFP
filled.
and gold is green. I don't think it'll stay green, but none of this, unless people really start worrying about recession or dollar or not, it might, I think, again, it might look like the 10-year. 10 years, 10 years a little bit, but it's only up by a quarter.
Filled.
Honestly, 10-year looks
Target
nice. I'm
filled.
surprised. Even TLT is in the gutter, but 10-year still has a possibility to go green, which is hilarious. So again, if this drops out from here, that means we're going to top out at 486, but I don't know if I believe that. But you are coming up here again. The Pumper Sandler play is already running. I think people are taking more than one job. They outline it. They talk about it a little bit, but I think right now, and maybe, I don't know if this is the reason, but it could be the government jobs, but because there was a surprise 70,000 there, but all across the board. I don't know if you guys realize today's labor report also included the yellow layoffs. You know that company that went bankrupt, the biggest trucking company? This report included that, and they still revised the numbers up, and it all was better. Again, it's a wild concept. So it just whether it's real, fake, delayed, any way you want to chop it up right now, the unemployment will not go down. It's not, you know what I'm saying? Like the amount of employed individuals in the United States, it's a weird resilience. I don't even know what to call it at this point, but it is the underlying theme of why we haven't crashed yet. It is, it's saying that, we have this strength that we may not be aware of, but it seems so elusive.
Stop
Watch out
filled.
for the red there. Again, gold is might go red,
Order
so watch out
filled.
there. Again, SHLS, that was the only play I was going to look at today. It was a Pumper Sandler play. Otherwise, bonds, and then we go for flips on the SPY. If not, 42.70. I kind of want to go for the greedy short, but I'm also like, I don't know if I should go for an individual name. Pinduoduo's on the high. So this is a weird spot. If you want the greedy short, this is uncertainty. Because again, you're 30 points pretty much to the top, 30 points now to the low, 20 or so. So this gives you, it's not really a greedy short. This is like 50-50. If you wanted to short the first candle, you're getting half of it back, but you still have the risk. The Bears would be hella more aggressive after this. They are. You're just, again, I think the market's trying to find a way to stay alive. Tesla's still down.
Stop filled.
If you short now, you'll be shorting in yesterday's low. Yeah, that's the only problem. The difference is you have bad data today, but like I'm saying, I would want to get it at a higher price than not. I'm still looking though. You can hear me clicking around. I'm looking at
Order
different plays. There's a
submitted.
couple of them. That's why I want to even go individual equities. I also want to do nothing too, but at the same time, it is a Friday here. If we get the right move, maybe
Order
it's just too
filled.
early. I'm gonna wait a little bit. It's only been 7 minutes. Coca-Cola, I like it. I mean, I still think it could go a little lower, and that's where I bought it. I think I bought it in the low 50s, but I like it a lot. The only problem with Coca-Cola
Target
is that
filled.
it doesn't yield a lot. So even if Coca-Cola drops another 5%, you're not going to be, what's it called? You're not going to be, like, it's still going to have like a 4% yield. The data isn't as bad as what the numbers suggest. The concept is bad. The data is good. The data was really, really good. The data was saying that Americans are employed. Just a couple months ago, people are worried about a lot of stuff. But what that implies is that the rates can go very, very high. That means, again, in the onslaught of all of this, of what we've done, Fed raising rates is not slowing
Target
down
filled.
inflation or economic demand at all. Mm,